Bitcoin doesn't move without taking someone's money first. Every big breakout starts with fear, liquidations, and forced mistakes. And if you don't understand this, you probably shouldn't be investing or especially trading. Today, I'm going to show you why Bitcoin does this better than any asset, the psychology behind it, and some of the signals that may well help you understand why there's a shakeout or when we're going to reverse. Now, if you're new around here, please do leave a like, subscribe, and comment what you think. Are we in a bear market? What are shakeouts, you're probably wondering? Not so much random, they are structural, and they are a part of how markets obviously work. You can see on the screen here, this is the monthly time frame, and you can see there's a fair share of little corrections, quite big corrections actually. But you got to look at the obvious in the room here. A market is a couple of things. One, it's an exchange. It's an auction system. You have to buy, and for you to buy, someone has to sell, right? Price will always seek liquidity, not direction. You've then got to look at the obvious smart money. Where does that accumulation start? Why does it happen? And how long for? Especially when you look at the ETF side of it. And obviously the retail I'm pointing a stick at you guys, and myself included, is the weak hands. The smaller money will get shaken out quicker because that inner greed will be meaning that you will enter in at a shitty price. Therefore, you're going to get shaken out quicker. This is where we get the liquidity theory. Because when I talk about, say, the profitable days, you're going to see that there's a lot of people that would have, I think, bought into Bitcoin over the last couple of months and now in the red a little bit. Because when we start talking about liquidity, this is just a very, very simple annotation using an indicator. Price doesn't magically just decide to go down. There will be a reason why that has happened, whether that has been a massive sell-off or, more importantly, where you see your stop losses go, because that's where liquidity lives. You've got to look at the obvious in the room here. You will get an area where market makers will target, and those equal lows may well have liquidity. A trend line will probably have liquidity. Sideways consolidation, you've got it, liquidity. That's a situation. There's many, many ways to skin a cat here. And that's a problem that people find themselves in when they get trapped, certainly in certain areas. And when we're talking about the world of crypto, it's leverage. It's highly fueled leverage, and market makers will always push into certain levels, fill in big orders, and then that's where the big moves will begin. And later on in this video, I will go through my actual Bitcoin chart where I have got some big levels pointed out. And even if you've been watching my content over the last few months, I've been talking about some of the levels that have now melted through, like wet paper, because there isn't enough liquidity to hold it up. Now, the psychology loop around this is why do retail get trapped, is because we're looking at shakeouts that are not really technical, they're just psychological. That's kind of the top and bottom of it. The chart will always go in three directions: up, sideways, down, right? Now, when we talk about the fear and greed on the screen here, it's somewhat just technical in terms of what the price is looking at, but also where the fear and greed is. It's kind of obvious you buy with the fear and you sell on euphoria. But obviously, if you're a retail or new or whatever, you will look at the obvious in the room is every single time you're going to get shaken out because fear, panic, capitulation, regret, and re-entry much higher is because your emotions are totally in the way. People want to buy and have the permission to buy when the candles are high. That's kind of the top and bottom of it, not when it's low, which is why I keep saying to people buy when there's fear, not when there's, euphoria. And that's the thing. People will always zoom in on those tiny little nuanced time frames of, oh my God, look at this, it's amazing. You shouldn't. Obviously, recency bias, this dip is different. We're never going to go lower than whatever price. Oh, we're going to go much higher. Panic selling becomes very predictable when it looks at, the world of Bitcoin, especially altcoins as well. So just be mindful of that feedback loop that you probably have found yourself into. Now, going back to Bitcoin, you've got, I would argue, three obvious ones in terms of where we are in terms of the obvious of what are these shakeouts and why are they so aggressive. You've obviously got liquidity sweeps. That's the top and bottom of it, where we deviate to the upside. The sharp reversal, ugly. This is where, realistically, as I say, it will trigger the stop losses. It will, create that issue. And when we talk about like these, even on the daily time frame, you can see how sharp some of these moves are and how they just totally reject at very key levels. And I will go through my actual chart in a minute. I'm just annotating at the minute with some graphical data. But sharp wicks, ugly. Volume spikes, yeah. Fast reversal, and then the sentiment collapses and then it flips and just dies. You can see that across the board ever since, you could argue, from all-time high, we've pulled back aggressively. gone lower. Pull back aggressively into a zone, gone lower. And we are just obviously collapsing. Now, the other one, which may not be as obvious, is actually the funding rate and liquidations. The reset. So funding, liquidations, open interest. Long story short, when the funding gets too high and open interest gets bloated, the market will tend to flush. Obviously, over leveraged longs, we will see that. It's very obvious. That's where it gets a bit greedy. And then obviously the market will reset and then it will flush them out. The market will then continue to rally from that point. And I've talked about this a few times, certainly on some videos, in terms of how it will change over the course of time. And if you look over the last 30 days, for example, yeah, not ideal, is it? So certain things have happened. Obviously, yes, you can look at the liquidation data. We've talked about this before. As and when certain things do go a little bit wrong, you know there's a situation where people are very, very late, and I talk about greedy piggies get slaughtered, and that's a situation where they're going into a certain zone, and all of a sudden it just gets rugged underneath your feet, and it catches everyone out. But going to the third and obvious one, realistically kind of linked to the first one, is structural fakeouts, the deviations, the ugliness, and where we talk about how the market will just do what it wants to do, but also follow the trend as your friend, and it will catch people out, because most people don't like to look at the obvious in the room. And I know that sounds very, very noddy, but when we talk about like stuff on the screen here, you can talk about, say, I don't know, stuff that I've used in the past would be maybe the EMA 21. Whoa, why are we below that? What about the RSI? Have we got divergences? Are we below certain points? Why is price remaining bearish? Why are we continuing that trend? Why is there no reversals? Sentiment flow. Until, as I say, number 2 happens, where you tend to get a reversal in those funding rates, or the market makers turn off a little bit and it catches everyone out. Obviously, yes, the trend is your friend until it's not, obviously. So there's certain situations and biases there you could look at. Now let's talk about my chart, because I think this is quite good. I've obviously had a few levels on my chart over the last few weeks. If you've been following me on X, you would know this, or if you're in my Patreon. By the way, if you want to jump in Patreon, there's a little link up here, or just press join membership, 35% off annuals. It won't be here forever. There's only so many codes, so make sure you jump in. But getting back to it, right? You got a couple of things you can talk about. The obvious one is volume. I don't really go off volume much, but if you do, there's one thing about volume that you need to know. If there's a dump that's happening on relatively low volume, it's more likely to be a shakeout. That's kind of the rule of thumb. It doesn't always happen, so don't go with that as an obvious. But the one thing that we do need to talk about is shakeouts and the reality of the fear and the greed and whatever. There's one chart that we do need to talk about, and I talked about it in my video last time, would be Bitcoin dominance. Why is this important? Because what this does, it tells you the overall risk on, risk off, especially if you pair it with the stable currency dominance. Because shakeouts often come, as you can see, with horrible wicks to the upside or to the downside, right? That's a thing. Fear, dominance will go up. If you reclaim certain areas, it will stabilize. If it pumps, basically means it's rolling over. So the situation like that. So what we're seeing right now, right? I know that's going to sound fucking wild, but altcoins are actually holding up better than Bitcoin currently. Hence why this is dropping. And I know you're probably thinking, but realistically, below my head or above my head, wherever I am these days, I can't remember, there's areas of interest around these numbers which are very, very odd. As much as they are all red today, Bitcoin's red, but the altcoins are or haven't recently been as bad, which is mental, I know. So yeah, Bitcoin dominance does have a bit of a part to play here in terms of why do we get horrible shakeouts. And as you can see here, ugly. But the most important thing you can talk about for this obvious situation is it a fake out? Is it not? What's happening? Are we reclaiming structure? That is the top and bottom. If Bitcoin closes back above its level it dumped from, it was a shakeout, simple rule. Obviously, yes, you could talk about how this has worked in the past very, very clearly. But more importantly, where are we now? Well, currently, we've obviously broken down to the downside. To reclaim this, we've got to get up here. Now, yes, you could talk about my chart here in terms of what I've got. I've got a lot of levels, and this is a very aggressive drop, obviously. We've pulled back massively. But I think now, if you are pressing that short button, and I do agree that people should be trading markets, not so much just trying to blindly guess, you may be caught out at this point. I think we're going to pull back up. And that's a situation we've got to look at. Why are people betting that we're going to go into a bear market now? Well, it's a bit odd, isn't it? Because if we go back in time a little bit here, we've had periods of big, horrible, ugly corrections in the past, as you can see here, and then we've gone much higher. Bitcoin is a bugger for just doing whatever hell it wants. And that's the reality of it, unfortunately. Going back even deeper, you can talk about like previous cycles and stuff like that, where we've had horrible, nasty ass corrections and bang, back up to levels. And then obviously into a bear market. And even then, realistically, this was a big move. This was horrible. I remember the sentiment here. It was awful. If you do want to trade, or if you want to invest with zero fees or very, very low fees, Blowfin, fantastic. There's no KYC required. It's open to the UK. If you want to trade futures, you can do it. Highly recommended instead of spot trading, realistically. I'd rather you have genuine stop losses and manage your risk. But what I do want to finish off here, I think a lot of people are overcomplicating Bitcoin. I do. And I've said this for a while on my Patreon that you need to try and treat it, like the S&P in a way, where you're just accumulating units as much as you can at the lowest possible points you can get to, obviously, because you're going to get liquidity grabs, you're going to get sentiment collapses, you're going to get horrible tight consolidations and ugliness, and then expansion and trend continuation. That's the reality of the market in any given shape. I've just showcased most of it from 2020, 2023, 2025, right? And that's the thing. So for me, when we talk about the obvious, let me give you a story, because there's times where in the past I've been shaken out because I'm overthinking the entire thing. I mean, I panicked in 2018. I bought really well in 2017. I should have sold more, obviously, later on. Thinking in 2020, in March, when the whole coronavirus came out, I thought that was it. We were cooked. I did buy low, but I should have had more conviction in myself. The whole world about the altcoin market going bang in 2021 was amazing. I got out at certain levels because it was too euphoric. And this cycle is very, very different. But it's all about emotion, right? Getting shaken out. Even people in 2023, 2024 were buying very, very high at high valuations on AI cryptocurrencies getting destroyed. You've got to have some sort of system in play that will work for you. But the thing is, you've got to have some rules, and set rules will help you over the long term. But the one rule that people forget is, why do you always get shaken out? Why do you always bet more when it's really green? But the thing is, people don't buy enough when it's red. If you can stomach the volatility and you're thinking long-term horizon, you know for a fact if you zoom out on Bitcoin, you are going to be okay. But that's the thing. If you stop overreacting when it's like emotional, it will, I think, get easier. And it has for me. If you're new around here and if you enjoyed this, please do leave a like. And obviously, yes, subscribe for more. And watch this video here. This will help you a lot with your psychology, I think anyways.